Good evening, everybody. This is a special report on Netflix for March 8th, 2018. First off, let's start off with the basics. Ticker is NFLX. It's primary traded on the NASDAQ. Current price is $317. 10-day moving average is 12.35 mil. 52-week high and low is $138.66 to $325.79. Next earnings date is April 16th, 2018, and there's no dividend currently. Earnings per share is $1.43. Price per earnings is $222.11. Revenue is $11,692.71 mil. Gross profit margin is 34.49%. Net profit margin is 5.46%. Return on equity is 20.38%. So let's start off first by talking about Netflix, and it's been on a killer run recently. They had a killer earnings, and subscriber growth went through the roof this last earnings report in February. And right here, you're looking at a 3-year weekly chart, and you can see over the 3 years, it's been consolidating a little bit in the last 2 years, but it's been progressively going up. And right here, you can see those two red bars currently. That's when we had that market pullback, and it's been up ever since. And it currently hit a high this week of $325.79, and its 3-year low is $58.46. Now, the big news that came out not too long ago, besides that killer subscriber growth, the CEO believes that it can see over $15 billion in revenue. And of course, we had Netflix get nominated for so many things recently with all their original content. So yes, they are spending a lot of money on original content, but it's actually good content. Usually some flop or not, but right now Netflix is on a roll where it really hasn't put anything bad, from documentaries to movies, even to the TV shows. And besides House of Cards, people thought it might have been its one-trick pony, but as you can see with Stranger Things and other original content Netflix, it has just been dominating the original show content. Now, I know a lot of people that have Netflix, especially in the U.S., are not so happy necessarily. There's a lot of movies that you can't get. I think Hulu, you can get a lot more. But once again, a lot of people are paying for that Netflix original content, and that's why the stock has been doing so well. And even in Europe, overseas, I just know they have way better, because of certain laws, they have way better content besides original content. So their outside growth, there's like so much potential. You really don't know, and a lot of analysts don't know how much can be capped, especially if they move into more the Asian markets. They can be really phenomenal. Now, they recently, I believe, put up a price charge to 10 something for a month and some change, which, yeah, it's getting a little high, but compared to all the other stuff and to compete with original content, they have to, because they're burning a lot of money. That's one thing that worries me, is they're burning through a lot of money yearly, but right now it's working for them. So really, there's nothing to worry currently at the moment. 20-day 1-hour chart, we've been seeing ever since 236 low and 11 cents. We've been seeing an uptrend the last 20 days. Some consolidation here in the week, but this week we really broke out. And here toward the end, we had a little pullback after Stifle put a hold, and they put a price target of 325. So you have some analysts that were giving it upgrades after this earnings report, but finally one firm came out and put a roadblock here. So right now you saw a pullback from that 325 level, and I don't think anytime soon we're going to be breaking that 325 level. If some way we do, I want to see at least break 330. But right now, I think the top might be in the short term until earnings, so we see some more subscriber growth, some more original content, see how their spending's going. But like I said, right now, it's still definitely hot. 5-day, 5-minute chart, like I wanted to show you guys here, ever since we hit the low of $283.23. We've been on a tear up. We've been gapping. And right here, like I said, after the announcement came today, you had that instant sell-off. You had it trying to recover, but even the market's been a little wishy-washy here. And through this 2-day period right here, through Wednesday and Thursday, you saw some consolidation where I've been seeing weekly options really trying to put the floor at 315 to 310 and max about 320. So I think tomorrow, depending on the jobs report that comes out tomorrow, the market could be up about 200 to 300 points or down to 200 to 300 points. We're looking for some key numbers just because we're going to be watching what inflation does and, of course, interest rate hikes. And, too good of a jobs number, good news might not be good news for the market. So if we get a pullback in the all-around market, we're definitely going to test 315 tomorrow. And if we break it and can't hold it during intraday, 310, I'm assuming, is going to be what we're going to be looking at in the short term. Overall, if you own Netflix and you've been a loyal investor for years, I would say I would take 20 to 30% off the table, take your profit. It's had a really good run. I don't think this is necessarily the top, but at the same time, it's moving a little too fast. And with that said and done, it's really, for it to go up to 400 to 450, it's going to really have to prove itself in the next 2 months. And I don't think we're going to be there in the next 2 weeks. So I think in the short term, you can get a better price somewhere between maybe below 300 if you're lucky, or slightly above, but I would take some off the table or possibly write some protective puts against your position where you can collect some premium in the short term if you don't want to unload your position at all. You're not getting a dividend. It is a growth stock, and even with earnings, depending on how they are, it's really about subscriber growth with Netflix. It's always been that. So if you have a little slowdown, they could get hammered a little bit, especially with it being this high. Like I said, I would take some profit. I wouldn't necessarily just jump on the bandwagon and take a large short over the next couple months. But if you want to scalp intraday and try to short a little bit, it's definitely doable, like I said, especially between these levels. But just remember, it's going to be kind of tight unless we have a breakdown or trend reversal or a continued breakout. So I think we're going to be stuck between this 325 and 310 range for a little bit, depending how the market does. If the market keeps rallying, definitely you're going to be seeing it test that 325 level. But if the market goes down a little bit, like I said, watch that 310, that 300 level. Then you're going to be watching that 283.23 level. And here I just wanted to show you the 1 day, of course, today with weak volume toward the close. So I wouldn't even, this couple green bars toward the end of the day, I think that's like options manipulation. I wouldn't even consider that much of an easy flow here, especially with after hours. Like I said, I think some people want it above 320 for the day and then watch it come back a little bit. But it's all about that jobs report tomorrow. We're going to be watching that as soon as it comes out in the morning. So my Wall Street investment rating is 4 stars out of 5. I would have given it a little bit of higher rating, but like I said, I think it's slightly ahead of itself right now, and it needs to consolidate and prove itself, and especially at these new price levels that it has just ran up this week. I mean, I watched it blast through 300 like crazy, hit 315 and plowed to 325 until that stifle put a hold rating compared to buy. So with that said and done, be careful. Still great company. Love it. Love their original content. Don't love all the content on there. I think Hulu does a good job, but with increasing competition and from other services, Disney is moving away from Netflix. They're going to have their service coming out soon. So Netflix is going to hit some competition here in the next couple of years. So they're going to have to keep delivering this key content to keep competitive and price worthy and to continue to grow and have their share price go up. So thank you guys. Have a wonderful day.